Hi, everyone. Welcome back to FOW Japan. Hi, everyone. Hi, welcome to FOW Japan. I'm George of Global Investor Group. Further to the commodity panel, we are now moving on to discuss the widely traded financial derivatives inflow and outflow of Japan, volatility versus diversification. Moderating the panel, I'm delighted to welcome Ms. Fieke Korporaal, the Corporate Development Manager of IMC Trading. Fieke is a financial markets, derivatives, and ETP trading specialist with 14 years of experience, mostly in the wholesale trading, market structure, and strategic development departments of the world's largest market makers. She worked in Amsterdam before and is now based in Singapore. To discuss this topic, Fieke is joined by our experts from True Partner Capital, Govert, APAC, HKEX, and Hong Kong Exchange. Again, we encourage you to ask questions throughout the session via the Q&A function on your screen to interact with the speakers. Please note that every session is being recorded and will be available on demand. Without further ado, I'd like to hand over to Fieke to get the panel started. Fieke, over to you.
Yeah, thank you so much, Joy, for your kind introduction. Just briefly on IMC Trading. IMC is a global liquidity provider with over 30 years of experience, specialized in listed index and stock options. And IMC provides competitive bid offer spreads on screen, but also off screen to qualified professional counterparties. So if you are an institutional investor and need double-sided quote, please feel free to get in touch. Okay, without further ado, good morning, good afternoon, and good evening for everyone attending around the world. First of all, I would like to introduce the panelists that are speaking today, starting with Govert Heijboer from True Partner Capital. Govert started as a derivative market maker in 2003, and he moved to Hong Kong in 2008. Govert is currently a founding partner and co-chief investment officer. By actively trading listed derivatives, True Partners Capital strives to generate uncorrelated returns for its clients and investors. So welcome, Govert. Secondly, Daniel Smith from Observer APAC. Daniel is currently the head of index options and options trading based in Australia. He ran Observer's highly active Korean options desk before taking up his current role. Throughout his career with the company, he has focused on automation and systematic options trading. Thirdly, Matthias Rittig, senior officer in charge of global business development at Osaka Exchange / JPX, dealing with global buy-side clients and hedge funds. He is also involved in the overall product design and market maker programs and such. Then lastly, Chris from the UK. Managing Director and Head of Velocity from Hong Kong Exchange. Chris is responsible for driving the liquidity growth of Hong Kong Exchange cash as well as derivatives products. He also leads a client-centric team in initiating and supporting trading and clearing infrastructure enhancements. Okay, let's then start this panel with the topic financial derivatives inflow and outflow, volatility versus diversification. If you do have any questions, as Joy mentioned, please feel free to put them in the chat box and we will try to get back to them as soon as possible. Okay, as you might know, JPX has quite a busy week last week. Firstly, because of the successful go live of JGate 3.0 based on the Nasdaq Genium INET. I heard everything went really well and according to plan. Thank you, JPX, Matthias, for this smooth transition. Another milestone was the launch of the CME Group Petroleum Index Futures listed on the OSE, denominated in the Japanese yen. And congratulations with both these achievements, Matthias. Regarding this petroleum, Matthias, could you please elaborate on the reasons behind listing this future and where do you think the liquidity is going to come from?
Yes, thanks a lot, Fieke. Hello, everybody. And yeah, it's a pleasure being here and sharing our thoughts and achievements over the last few weeks with you, right? So yes, also indeed, it was a very busy week for us, right? To launch the new platform and a busy months before that. And again, Cannot stress how much we appreciate everybody's support and our IT, but also, of course, obviously, all the buy sides and sell sides, all our clients all over the world, to make this flawless and pretty smooth go live so far. So knock on wood, everything is going well. And yeah, for the rationale with regards to our launch of the petroleum index future, obviously, we're very proud to have managed to list this contract, because it's the first time for us as OSE to list the energy contract. And if you know the market structure in Japan, obviously there's a different sets of regulators, right? With METI governing the energy markets and JFSA being responsible for financial derivatives. This is the first contract that is listed under OSE, which is under JFSA supervision. And obviously there's a strong demand from Japanese retail for such kind of products. And yeah, we teamed up with CME to make this happen. And so far, so good. The first volumes look very encouraging, and more to come.
Thanks so much, Matthias. Sorry, can you say something about the correlation with the other products?
Yeah, of course. Obviously, there's a very new contract, right? The CME PI is comprised mainly of WTI, but also other contracts that are listed on NYMEX, obviously, right? So it's a new contract. It doesn't perfectly correlate one-to-one to some other contract or arbitrage, right? But obviously, there's a strong correlation across other oil contracts globally, and especially in Asia. Obviously, like in the previous panel, there was some brief remarks about this. Obviously, there's a good opportunity arbitraging these contracts against other regional oil contracts as well as global oil benchmarks.
Nice, thanks for this. Yeah, it would also be interesting to see correlated products on this future to further cultivate this product, such as ETFs on the TSE, for example. I haven't seen. Okay, so let's start with the first topic regarding trading index options and futures in Japan. Where is the market evolving? What are the trends you see? What do you consider the Japanese market's strengths? Matthias, again, if you could please start, this would be great.
Yeah, obviously, it's a big topic, right? And a lot of questions in one question, but I'll try to make it as brief as possible, right? Obviously, the market is evolving, obviously, further and beyond, right? Obviously, this new technology, the rationale behind is, of course, to have a more deterministic trading experience on our market, right? And hence increase the overall flow of participants, of global participants, but also, of course, domestic participants to cultivate those traders further. For example, in Japan, we see one trend that we see evolving is obviously increased demand by Japanese retail or adoption of option strategies, right? That is something that we're very, very keen on cultivating, obviously, in the future. One could think that we could also design corresponding products additionally to that, right? And then for the strengths of the Japanese market, obviously it's very unique in Asia in a sense that it's one of the global benchmarks. Obviously, is the Nikkei, right? The Nikkei complex. We have also, of course, the topics contract, right, which is also widely traded by institutionals, and those two contracts both have options, underlying options, right? Obviously, the Nikkei options are far more liquid and on screen traded, but also topics options, we see an increase in open interest, right? So that is something obviously also where we try to engage with market makers to have people price these contracts on screen going forward, and yeah, we're working on other corresponding products in that whole complex to attract or to make it more palatable for certain trading participants or such as retail or institutionals, right, to make the whole experience easier and even better. So yeah, these are the things that we're working on, and yeah, leave it to my fellow speakers to elaborate further.
Yeah, thanks so much, Matthias. Daniel, if you could share your view, that would be great.
Yeah, thanks a lot, Fieke and Matthias. Yeah, I think Matthias said it really well. You know, the Nikkei is a global benchmark. I think that's a real strength of Japan. Like where the world outside of Asia looks to Asia, they still look to Japan as the main first economy to look at. And for a couple of reasons, Japan's still the largest stock market. It's clearly the largest stock market in Asia outside of China, where global access is easy. Also, it's quite unique in Asia, and it's quite high correlation to other macro products around the world, but also has all these idiosyncratic moves that come from local events that we've seen a lot recently and today with the political news in Japan. And I think the night market in Japan is really a testament to this. Like, it's a real strength of the Japanese options space. We really see significant growth in the night market, and it goes right through the night, like peaks as soon as the US traders come in. There's a lot of demand to trade Japan for that. In terms of some trends, I think Matthias touched on a couple. That retail interest in derivatives is something that we're seeing globally, and we're seeing it in Japan as well. We're definitely expecting to see that continue. There's also, probably because of that, going to be a trend to larger volume in short-term options compared to before, because generally we know institutional flow more favors long-term options over short-term options, and vice versa for retail flow. I think something else we're seeing across Asia and Europe to some extent as well, but especially across Asia, is really this retailers are getting more and more interested in trading US equities in particular, but like global equities in their time zone. And also, especially certain equities, we know, of course, like things like Tesla have always been popular, but now thematic ETFs around ESG, solar, electronic vehicles are becoming really popular as well. And I think that trend is only going to continue. This desire for retailers to trade when they want to, but access global markets. I think Fieke touched on it, and so did Matthias, but like another strength that I think is important to really call out, because it's very pertinent, is the Japan market has always been leading the world in terms of like their technology, and we see it again with this upgrade. So congratulations from my side as well, Matthias, on like a successful upgrade. But I think that's always been a strength. People know they can look to Japan and know they'll be on like first-class systems to trade as well.
Thanks, Daniel. Govert, if you can please add to this.
A lot of things already been said, of course, by Daniel and Matthias. I guess for me, from let's say a fund manager side, focused on derivative trading, for us, the strength of the Japanese market is obviously, as let's say one of the major economies in Asia and major equity markets, is that the liquidity that you have in especially Nikkei options and futures is let's say one of the highest in Asia and in general in the world. So that's definitely the strengths. And I think the strengths, which should also not be underestimated, is indeed the fact that you can nearly trade it for 24 hours a day with decent liquidity, especially in the futures, and to a certain extent, indeed, in evening sessions in the options as well. I do think an interesting trend, obviously, is that not so long ago, weekly options were added on the Nikkei. Of course, especially from a fund manager side, having typically slightly larger positions, the liquidity is picking up, but hopefully that trend will continue. So in terms of strengths, I think that's clearly where Japan stands out, and obviously, from a global perspective, access is easy from let's say from every country. It's part of a global system. We as a manager, we focus mainly on equity index and equity derivatives trading. So for us, it's one of the key markets we look at.
Thanks so much, Govert, for sharing your view indeed from a fund's perspective. One of the focus points of this session is diversification. And diversification could mean the ability to diversify your strategies and or your portfolios. And which products could be added to the current suite of products at OSE to further grow the total traded volume in derivatives in Japan? And or which other growth opportunities or potentials do you see with regards to products already listed on the OSE? Would be very valuable to hear this from a market maker's perspective, as well as from a buy-side point of view. So Daniel, if you could please start.
Thanks, Fieke. I think Herbert alluded to one product there, the weekly options, which successful launch and liquidity is growing, but definitely something that we look to continue to support. And yeah, I would really like to see that grow further as well. I think, as we were talking about, Japan has this strength as this, in Asia, it is the liquid market. For the Nikkei options, it's got this flagship product that really is just, it has overwhelming liquidity compared to a lot of other products, especially for institutional traders, as Govert mentioned. There's a lot of liquidity going far back for long-term options. I think there are a couple of examples of products where Japan, we see a lot of liquidity in exchanges worldwide which haven't taken off yet in Japan. And I think these are real opportunities for the Japanese market in general. I think single stock options still stands out as the largest one. Like, it is the largest, like I mentioned, the largest stock market in Asia outside of China. We already see a lot of OTC turnover in this space, but it's just not matched in the screen. I think it's a couple of factors that are small, we talk about, that have just stymied growth a little bit to this point, but I think we can overcome those. I think it will be an extremely successful product. I think also region-wide, there's a demand to trade variance products on listed exchanges. But right now, no volatility futures exist in Asia. And again, because of the strong liquidity in Nikkei options, Japan is really ideally placed to be the go-to market for Asia for such a product. And this is also important in what we were talking about before, where Japan is the place that global investors that already trade things like the VIX or the V stocks that are very successful products turn to Japan first in Asia. Currently, again, it's just hampered by some small points around strike listing and settlement. But with small changes, I think it can be a really robust product. And I would expect to see a lot of growth over time. And I think one of our strengths, that we see, is we bring a strong pricing base to our market making. So really look forward to pricing these liquid instruments and trading. So I definitely look forward to that. I'll pass over to Govert to hear from his perspective.
Actually, we look at very much products that you're looking at as well, of course, as a market maker. I think over the years in Japan, I think there have been initiatives to get the single stock option market going more from a listed perspective, and same for the volatility futures. And weekly options as well, which actually is catching on a bit more. So it's always a bit difficult to gauge why certain products are not immediately a success, because indeed on paper you would think that single stock options, volatility futures, but also even more trading in the topics, except for because now it's mainly a block trade kind of market. So topics options should be suitable for let's say more liquidity, etc. But it's a bit of a chicken and egg problem in the sense that for us as a volatility manager and derivative manager, when liquidity is fairly limited, almost non-existent, then typically it's not a product that we start to look at. So we first need to see some liquidity before we will come in. So you get a bit of this chicken and egg problem, how this let's say comes about. So that does require, let's say, sort of cooperation from all parties, not only from the exchange market makers, from our side as well, but even banks, and to obviously to get a lot of, because a lot of things are now available more in an OTC kind of way, and that's of course you need to have some willingness to bring some more of that towards the exchanges. But like I said, we hope that at some point this sort of chicken and egg problem gets into a sort of a positive feedback loop whereby liquidity would increase in let's say different kind of products. But I do agree that in principle that Japan with its large equity markets should be well positioned for this.
Yeah, thank you so much, Govert. Yeah, the chicken and egg, that's always a bit of an issue. But once it starts off, then liquidity attracts liquidity, and then it's then it should be, then you can add additional strategies, I think, as well, such as dispersion and these kind of things.
Yeah, sometimes it can be just small things, like Daniel said about the settlement of things that make it not working initially. But yeah, it's always a bit difficult to gauge where the issue lies.
Yeah, the devil is in the details in these in these products, indeed. And as you say, like correlated products such as ETFs, indeed, and that would also help cultivate the all the products basically. So Matthias, again, on which products and/or opportunities is the exchange going to focus in the coming years, and why? And what do you consider your biggest challenges?
Yeah, so already Daniel and Govert were kind enough to raise some of the products that we indeed want to focus on, right? Of course, we recognize the demand or the underlying demand and requests from global buy sides, as you say, like from dispersion funds and vol players, right? To have a more actively traded volatility index futures contract, right? That is one thing we want to focus on. Single stock options have been a topic that has been going on for a very long time in Japan. And I think finally now also the Japanese retail, right, which will probably be instrumental in driving this forward, comes to the table and is more willing to also make the necessary steps, take the necessary steps in terms of member readiness, right, to be able to digest these products, right. So I think we're on a good way there, and you will see a lot more of that in the very near future from us. And then other than that, and opportunities, yeah, of course, I think commodities, of course, is the other big story, right, that we want to focus on. Yes, with the LNG and contracts like that we mentioned in the previous panel, but yeah, this is something that we will focus on in the near term. And then obviously also, of course, different flavors, right? The weeklies is something that has a lot more room for growth, right? Especially if you look around the region, right? Many exchanges have very, very liquid contracts in that realm. And we have to analyze and see why that is so different in Japan. I think also there's more potential. Yeah, it's these kind of things, right? Getting some of these, as you said, right, the nitty-gritty details right, and then make the right tweaking in order to make it successful. Yeah,
the JKM contract, that's also a great success.
Yeah, the LNG, right? I mean, the liquid natural gas.
Yeah, that's really.
There's a massive opportunity, obviously, right?
Yeah.
And hopefully also there again we will have all the stakeholders and everybody there to distribute this and make this known and available to everyone. But it looks strategy-wise or in terms of on paper, it all looks very, very beautiful, and hopefully we can materialize it quickly. It will take some time, obviously. Nothing happens overnight, but I'm quite confident that this will be a very successful product in the region.
Yeah, I agree. Okay, second one. As the focus on this session also deals with volatility, let's discuss volatility with a volatility trader. Daniel, how do you view markets with a focus on volatility? You mentioned a couple of products in the previous question, but how could these options and futures support the search for additional yield?
Thanks, Fieke. Yeah, I think it's a really interesting space at the moment, and something that we're talking about a lot. And we hear people, in the industry and the buy side, other market makers talking about consistently is like this growth. There's this growth of investors turning to yield product to vol products for yield, and I think it's coming from like a number of angles at the same time. I mean, the primary thing that we've all experienced over the last 10 years is this world of low real yields. Like the interest rates are extremely low around the world. That's been the case since the financial crisis. But now there's this changing expectation where we have low real yields now, but an expectation of increasing real yields in the future. And a lot of fund managers, where they look at the 60-40 portfolio that everybody's talked about for a long time, and looking at that 40% allocation to bonds to provide protection and diversification away from equities, really have stopped looking away from that now because of the macro situation we're in. And a lot of fund managers are starting to look towards volatility products to provide that protection, to seek more yield in their equities. So that's one way that people are looking at it more. I think the other thing that's been prevalent for a number of years now is like the retail search for yield through auto-callable products. That then effectively these are volatility products, exotic volatility products, that then also flows into the volatility market. But retailers have started moving away from that a little bit and just searching for yield by trading more. And that's something we've seen this year, especially, big stories out of the US, obviously in the retail market that we see flowing into our markets all through Asia and Japan as well. And where retailers are really looking not just to equities, but to derivatives, to express opinions, to search for yield with limited downside. And all these things, all these factors are kind of coming in, and then they're causing dislocations in the market because there are these flows that come through. And that's where people on the buy side are looking to take advantage of these flows, find opportunities in the market. And there are more opportunities because there's more trading, because there's more interest. And I think it's a bit of a cascading thing at the moment. We see just an increasing interest in using derivative products for these purposes, but especially, again, like what we see globally is in the single stock options. I think that's been the place that we've seen the most growth this year. Might pass over to Govert.
Yeah, sorry, I couldn't find my unmute button. Yeah, thanks so much. With regards to managing market fragility risk, how can options be used as a protective strategy in the low yield environment, Govert?
Yeah, so Daniel just talked about now that, of course, that you can use options for so-called yield enhancement, which often means, let's say, selling options or having to collect premiums that are higher than the current bond yields, obviously, that are hovering around the zero-ish level. Yeah, tick up yesterday, but still around zero, especially in Japan. But you can also look at it in a slightly different way. So because typically, like in years when the markets are very weak, normally that if you have this 60-40 bond portfolio with 60 equity, then the bonds tend to provide a bit of a cushion, especially like in years like 08 and in the past, because when interest rates are, let's say, were clearly above zero, then central banks can push them down to zero, and they provide like an extra yield or an extra return in these kind of environments where equity does pretty badly. So if you do yield enhancement through selling options, that actually tends to have more like the opposite effect in these down markets. So for that perspective, if you look at it more from volatility, and that's the way I see it. So if you consider volatility as an asset class, as a separate asset class, and then in that sense, it's a true diversifier. So as an asset class, I mean, obviously that, you can have long volatility and short volatility positions. So with a long volatility position, that typically means from a listed option perspective, buying calls and buying puts, or being long fixed futures or OTC contracts in a similar way. So when you are long volatility, actually like last year, like in March 2020, that was one of the few asset classes that did really, really well, especially because the market went down so quickly. And also what you saw already in March 2020 is that, with your bonds, you were sort of okay, but it did not really provide that much of an extra positive return because the yields were already so low. So in that sense, adding some volatility as an asset class to your portfolio as a whole can be a very good improvement to your Sharpe ratio, and especially now that little part of that 40% part that is in the classic 60-40 bonds. Yeah, the question is, of course, whether that's continued to work so well with these yields being around zero. But there is one thing, and I think that's on the one hand where the yield enhancement comes from, and on the other hand, being long volatility, it sounds nice, you're protected on the downside, but it is one of the asset classes that has, in a way, the largest cost of carry out there, in the sense that obviously when you trade commodities, like maybe discussed in the previous panels, in the contango situations, you have a decent amount of carry that you have. Maybe not so much nowadays and with the backwardations in natural gas and everything, but normally, whereas for volatility, this is even much larger. So everybody talks about the FIX, but the FIX itself is just an index, so you cannot buy it. You can only buy the so-called FIX futures. But the FIX futures, the ones now that they trade pretty high around 21, 22. But the ones out there, let's say in February, they already trade 24, 25. So So if you buy one, it does roll down quite a bit and quite aggressively. So in that sense, the best approach to trade, let's say, volatility as an asset class is typically by trading it very actively. So this is what managers like us do. And so if you see how active volatility trading can help as a protective strategy in these kind of low yields environments, you can look at indices like the CBU Eureka Hedge Volatility Indices, which has a long volatility index and a relative volatility index, which actually shows managers trading volatility. And you see that, these kind of managers perform well, especially in extreme circumstances like March 2020. With listed derivatives, you can go both ways basically, like for yields enhancements or protective. And I guess obviously it's important to look at the markets and look at the height of the volatility. What would be the most interesting positions?
Yes, thank you so much, Govert. Matthias, do you want to share your thoughts?
Yeah, I can't really add much to Daniel and Govert, right? I think they really spot on with their analysis there, right? And what would make sense. But I would just say, obviously, there is, given the recent years of bull run that we enjoyed, right? And markets are active and people sitting on their portfolios. I think downside protection is definitely a topic for the year to come. And it could be expressed via structures. It could be expressed via trading VIX nodes or Nikkei VI nodes or things like that. I think that this is something that we need to also put more effort into educating the retail, but also in some of the institutional side in Japan. And that is a bit of a challenge, but it's also a good opportunity. So that is certainly a topic that we want to promote more with our investors.
Yeah, well, that's good to hear. Indeed, Tagaya-san, he also mentioned that JPX does a lot of retail or in general education. I used to work at a retail broker when I was a student, and it was always in real estate you have the mantra location, 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 but in for financial markets and trading, I feel it's really it's like education, education, education. So they don't, so nobody burns their fingers while they, in market volatility. Chris, I feel I neglected you a little bit for this panel. Could you please shed some light on the main difference with regards to the Hong Kong markets?
So I guess I'm sitting here a little bit as the outsider into the Japanese market, which is probably why you've neglected me. To rephrase your question, rather than cover the differences first, let's kind of phrase it as the similarities first, because I think the Japanese markets and the Hong Kong markets, they actually have quite a lot in common in terms of the fact Japan's got a great ecosystem of loads of diverse products. It's got the ETF markets, obviously it's got the stock options, the index options, it's got weekly options, and all of the above is what we in Hong Kong have got. And we're obviously striving to bring international clients to trade our market, as Matthias is trying to do for the Japanese market. And I think our challenge is to actually strive to try and get the Japanese market, the Japanese clientele, which is diverse, just like the Hong Kong market, retail, institutional, etc., to trade our market. And I think that's a great opportunity for us. I think one of the challenges we face is the translation, in that a lot of the, if you would say, for example, you were trading stock options in Hong Kong, you'd want the news translated into Japanese probably. There's various vendors that are working in Tokyo that do that into the Hong Kong market, but it's not an easy thing. So that's some of the kind of similarities. If you look at the differences, I guess, and you're talking vol products, we've got a fairly huge structured product business in Hong Kong. But I think a lot of our differences is blessed with our cash market, which is, IPO hungry, There's a KPMG report today that I'm read, so I'm not quoting anything I shouldn't say. There's estimated that we will have a listings of about 500 billion Hong Kong dollars this year. We're up to about 285 billion Hong Kong dollars of listings on IPOs this year. That's KPMG saying that. So that's probably some of the differences in that our IPO market is a lot bigger, and therefore that funnels our stock option business. And we list, I don't know, we've got 120 odd stock options listed now, of which the tech has grown significantly. But, you know, back to the similarities, stock options, index options, weekly options, all those kind of things are very similar. And so I think that's probably why, although I'm sitting here as the outsider, it's actually, there is some method in the madness of perhaps you inviting me to be here, I hope.
Thanks, Chris. Well, up to the third topic of this panel, actually. Before starting this topic, Chris, congratulations with the Hong Kong Exchange planned launch of the derivatives product on the new MSCI China A50 Connect Index on the 18th of October. Regarding this subtopic of this panel, evaluating Japanese participation in overseas markets. Yeah, you briefly touched on this already, but could you please elaborate on Hong Kong Exchange's product lineups and these products in particular, and on which products is Hong Kong Exchange going to focus and why, and which challenges do you see for the future?
Yeah, so it's been a busy lockdown for everybody all around the world, but particularly us in Hong Kong, because we kind of started last year with the MSCI listings of the 30 plus MSCI contracts, the NTRs and the non-NTRs, and that sort of took us through 2020. So that's a busy period of that, and then we go into Hang Seng Tech, tech options. Blessed again with IPOs of 10 plus tech companies this year, tech and biotech companies this year that have listed. We're able then to put an index together of tech. So the focus has kind of moved as we've put those products in. We've moved focus, has grown onto other products. So tech's become a big product, and obviously now the mouthful that you did manage to get out is the MSCI China A50 Connect Future, which, as you say, goes live October 18th. I know you plugged it already, and I shouldn't probably do it again. That's obviously a massive focus for us now. It's been a long time coming. I've been at the exchange 6 years, and we've been talking about it since as long as I've been there. So we're really excited about getting that launched, but also excited about growing that ecosystem that we've done a relatively good job in with other partners around the region to grow our Stock Connect ecosystem. But this gives us an opportunity to bring players into that market that perhaps don't trade today, those products, the ETFs, the structured products, and then obviously the underlying Stock Connect, which all of that has done, northbound, southbound has been terrific volumes the last few years. Our stock options threefold in 5 years. Northbound, southbound hitting daily records into Shanghai, Shenzhen, and back into Hong Kong. So I think our focus is, I don't think I can say we're just focused on one thing. Obviously, A50 MSCI contract is a major focus, but I think tech, biotech, we'd love to grow the weeklies in areas that we don't perhaps have weeklies now. And we want to grow that ecosystem of retail investors in our market, institutions in our market globally and regionally. And probably our biggest opportunity is probably regionally, because it's all sitting in that same time zone. And going back full circle, the ecosystem of Japan is very similar to ours in many respects. The client bases are very similar to us. So I think there's a lot of synergies and opportunities for us all in the region.
Thanks. As an option trader, we are super interesting actually to hear when you're going to, the future hasn't even been launched, but when are you going to launch options on the MSCI China A50 Connect Index Future?
I think you opened the first two words and I knew what the question was going to be. So for the 6 years that I've been involved in trying to get a product like this on the street, the first question we always had with every meeting was, when are you going to launch you know, a futures contract on A share. That was the first question of every meeting. That's now longer the first question of every meeting. The first question now of every meeting is, when are you going to launch options on the A share future that you have? We'd love to. There's no plans. There's no date. We'd love to. That's about all I can say. There's no immediate plans to do that. I think we've got to get the future out there liquid and then go from there.
Yeah, so I also wanted to ask you, maybe this is perhaps a bit of a difficult question. So how will Hong Kong Exchange determine when the timing would be right for options?
Probably with our regulator. I think we definitely, you've got to get a liquid future. The Hang Seng Tech, we got out there pretty much straight away with options launched against it. It was quite brave to do it. I think we launched the options a very, very short time after the future went live. It was quite brave to do it. It's working. It's growing. I think we've got a few other concerns, and I think we've got to get the future out there. So I can't give you any more than that. I'm not going to give you any scoop.
Thanks. One note, by the way, in Israel, they launched the options before the futures in the index options.
Wow.
And then they got known trading synthetic futures, basically.
Wow.
So that's why the futures. I'm not sure what the future. Anyway, it's just a note. So let's go to the next topic. Discussing the emergence. Assessing what proprietary trading systems, or in short PTS's, ascent means for market fragmentation in Japan. Will the total pie grow? Why or why not? What works well regarding competitiveness and what doesn't work well? Daniel, would you like to start?
Yeah, thanks, Fieke. I think it's a very pertinent topic, obviously in Japan, but also globally. I think that's really the key benefit of a PTS is that it provides a different venue for people to trade on, but that in itself doesn't necessarily grow interest in the market. The competition has to be there to really service things that the end investor wants, and it has to be around making it better for the end investor. And that's when the turnover will grow, because there's more things that the end investor wants to trade. So I think this competition can be good. But, what do we know the investor wants? And we've talked about a lot of things today already. I think one clear one is investors in Asia in particular want to be able to access global markets in their time zones on their own exchanges. And I think, these thematic ETFs, things like that, if there's more diversification of when we can trade and what we can trade, how we can trade, there will be a growth. But just fragmentation for fragmentation's sense, just having the same thing in two locations, that doesn't necessarily mean growth. That just means that volume will be split. So I think that's the kind of barometer for if this is creating a healthier market, because that's what we should all be after, is just a healthier market for the end investor, a healthier, safer market with more options to trade.
Yeah, thanks, Daniel. Matthias?
Oops. Yes. Obviously, in our case, right, as Daniel already pointed out, quite rightfully so, right? Obviously, if there's some sort of cultivation of services, right, or demand being met that we don't see, for example, right, by PTS, I think that's very welcome. Also, of course, if the PTS does bring a new clientele to the market, right, which would otherwise not access the market and hence grow the pie, that would be good. But most of the times, obviously, or what we experience is more like some sort of a cannibalization approach, right? And I think what's very much key for these things in general is that there's some sort of level playing field, right? That both the exchanges as well as the PTSs operate under the same set of rules. And also the accessibility, right, for all participants. Is definitely key. But on the other hand, at the end of the day, of course, we have to embrace competition in a sense, right? It's a good thing. I don't think it's a negative thing, but of course, in markets, the quality of the market could erode if it's it's not well managed, right? For example, yeah, it has to be some sort of playing field, obviously, under which otherwise players will just be armed against each other, and then potentially we will have some sort of fragmentation that is not necessarily good for the overall investor price formation, right? Is obviously key to all this. And yeah, there's a different flavors out there in the world, right? Of course, I don't think anybody wants to mimic the US market structure or copy it, right? Although it is a good thing to have one unified tape, right? For example, where all the data is aggregated. MiFID also had the same approach, but yeah, is it a success or not? In some certain aspects, for sure. On the other hand, it's also a cost to connect to all these different venues, right? And in order to improve market quality, yeah, it has to be well managed, I would say.
Thanks, Matthias. Govert?
Yeah, in a way, I have not too much to add. I think for us, let's say as a global fund manager, yeah, if a market like Japan gets fragmented into many proprietary trading systems, that's in a way makes things more difficult if it means that let's say order flow is being split completely, etc. Of course, the US system has this, like you said, has unified tape that you can get, unified sort of market data, and that's from best executions that the orders need to be forced rerouted, etc., to the best place to get them executed. So in that sense, yeah, then you can still see it as one market, but with competition on there. And so it's with this fragmentation, it's always a bit difficult if, let's say, also from a perspective of having to connect to all this different market data, etc. I mean, there's of course, I think from a competition perspective, I guess as a fund manager, we are not necessarily against it. Might bring fees down a little bit, etc. But yeah, there can be such a thing as too much competition and sort of cannibalization, and in that sense, sort of even like almost destabilizing the whole system if it becomes too fragmented. So.
Yeah, thanks, Govert. Yeah. So let's go to the fifth topic of this panel, and it is discussing the emergence of zero commission retail brokerage. Govert already touched on the fees a little bit. The retail brokerage pricing model, how will it work out in the longer term? What could be the opportunities and pitfalls? And are changes in the market structure needed? Govert, if you can proceed.
Yeah, so I guess I have more like a view as a fund manager. So I think for us, let's say trading derivatives, if this zero fee structure leads to much more retail participation in the option markets, I think probably Optiver can concur, and IMC as well, that typically is good for business, and for us gives opportunities to we typically engage in volatility spreads between things, and retail tends to have, let's say, high focus on certain products and less focus on other products, so that gives opportunities. I think the same thing, I mean, yeah, you can, so whether it's good or bad for retail itself, I think zero fees is a typical structure that is already in place for a lot of tech kind of products, and of course, the social media being the I think the most clear ones. I mean, yeah, the Googles and Facebooks, etc. You get this all for free, whereas obviously retail should know that these companies, they do make money somehow. I mean, whether it's from advertising or other knowing things about you, etc. So yeah, I mean, in that sense, it's not so dissimilar. Obviously, that if you trade for zero fees, that these brokerages, that they know something about you and your trading behavior, or the order flow is already being mentioned. So I think obviously I think it should be clear for everyone, retail, that these companies, they're not charities, right? So they do it they do it for a reason that way. But I think it's not necessarily bad from a retail investor that you can trade for zero fees. I think when 20 years ago, when I started trading and markets were also a bit more hectic, like the Nasdaq also going to the roof in the late 90s. I mean, zero fees would have been welcome.
Nice. Thanks, Govert. Daniel?
I think Govert touches on some good points there, especially that reference to 20 years ago. And I think in the last 20 years, so much has changed in the markets that makes it cheaper to trade. And like markets have become more liquid, clearing has become more automated. On one hand, it is just a lot cheaper for brokers to provide services to execute into markets. On the other hand, you've got this real rise, especially recently, in app-based trading that is, I think, just globally, not just in America, not just in Japan, like everywhere. We see just new companies popping up very quickly with the ability to advertise their services, to get new brokerages, to get retail flow. And commissions are always going to be one of the key ways that these brokers can differentiate themselves, but not the only way. Like Herbert mentioned a number of other interesting points around, it is for a lot of these things like a social media service, like it's like for access to products or the advertising, these are different ways that they can differentiate themselves. I think like Matthias mentioned the kind of differences, the minute differences in regulation in the last question that really will determine how this market will evolve. And I think I know the Japanese regulator is thinking about, I'm sure they're thinking about this like very carefully, looking to Europe, looking to the US, looking at the different outcomes. And there are a few cases around the world where you can see how this does go. I mean, in Japan, we already have some brokers that charge zero commissions for their equity trading. And I think that like this general trend for cheaper and cheaper trading, especially where like people who are trading, their size is small, sociable, relative to the market, that's definitely going to continue. How it ends up in terms of affecting the broader market structure, I think it will be determined a lot by regulation. Definitely wait to see in this space.
Thanks, both of you, for your elaborate answers. Very nice. Which trends do you see regarding increased retail participation in securities and futures and options trading, also with regards to products such as ETFs in Japan as well as in Hong Kong? So what do you think caused these trends? Matthias?
Yes. In regards to the ETFs, I would just say, of course, a lot of it is driven obviously by one of our best customers, right? The Bank of Japan, which has been very actively participating, obviously. No, but joke aside, obviously it's a general theme, right? In Japan to move from savings to investments. As many of you know, the Japanese are a country of savers, right? Obviously, given the demographic future, right, of Japan, obviously, it will come to a point where obviously people will have to take care of their own pensions, right, somehow in one shape or the other. So they should somehow engage with investing, and ETFs has always been like the most elegant tool in a sense, right, to get index exposure. I think it's also, of course, easy to understand, right? Obviously, it's not as complex such as options, for examples. But as a trend, so what that is one thing that fuels that, obviously, right, is this kind of like shifting the responsibility from the government. Is a global thing, but also especially in Japan, obviously, right, with these kind of saving plans and things like that, where people take care of their own private pension in the future. So some money is allocated into ETFs, mostly, obviously, right. And this is probably one big trend. And also, of course, it's just a timeliness of themes, right? Obviously, if let's assume you want to have exposure to a certain country like India or China or somewhere, or commodities or whatever, Bitcoin, whatever it is, right? You could basically just employ some sort of ETF structure and trade it through your cash account, which is obviously very easy to handle. And in that sense, I guess that is something that we do a lot of education on, also on the cash side, right? Obviously, and we want to cultivate that further. And hopefully in the future, we will see more products that also employ more derivatives on our market to interplay with each other. So all the market makers will also have more tools to play with. And
Yeah, thanks, Matthias. Chris?
Well, so just covering ETFs as that point, we've made and we're very happy, obviously, that Japan has a huge ETF market, because a lot of this comes down to education. So if people understand it in one market, they'll understand it in every other market, and the same for the US. We've made as you know, Fieke, we've made a very concrete plan in changing and restructuring our ETF market. It's been a long, it's taken us a few years to get through that plan, but it's been very structured in terms of the order that we've been doing things to encourage the market structure to be right, to bring more players in, to make the markets tighter, to reward them for the right reason and not the wrong reason. And I think we're making a lot of headway. And obviously the target, everyone looks into the US and looks at, 30% of the market is cash market is ETFs, and everyone's probably target is that. But we weren't going to get anywhere near that without restructuring some of that ETF business, like the creation redemptions, the tick sizes, the rewards for market makers, just the ability for a market maker to even market make. You couldn't do it 3 years ago if you were offshore. Now you can do it offshore for us. So we've done a lot of concerted effort for that. And we're very conscious, so back to that retail question, we're very conscious about growing that retail participation, because we don't want a market that's just one-sided. So it's important for us to grow that retail market. To Govert's point, there's no such thing as free lunch. When you that's what I was taught in the early days. When you're getting free commissions, there's no such thing as a free lunch. Someone's paying somewhere, and the cost has massively reduced. It doesn't mean the flow's being sold. It just means that they're making some money somewhere else. But the opportunity for retail is enormous in Asia when you think about how many people don't trade. And I think that's, without going into too much detail, because I know we're running out of time, we're seeing a massive uplift in retail participation, which we believe is very good for our market, for the hedge funds, for the prop traders, for the buy side, for the sell side. I'll stop there because I think you're running out of time. So I can carry on with our retail growth. It's been enormous, and we're seeing big tech now backing retail. So big tech firms now backing retail with their hundreds of thousands, if not millions, of clients that they can bring to the retail market, which I think is great.
Yeah, thanks so much, Chris. Thanks to all of you. Actually, we are indeed running out of time. So I go to the final question to all of you. We discussed it already, but so the final question, and I know you cannot predict the future, of course, but if you would have to bet, maybe this is not for Matthias, will the Nikkei finish over or under 30,000 at the end of 2021? Daniel, do you want to start?
Yeah, I mean, it's been bouncing around. It's been a historic rally recently. I think it could definitely finish over by the end of the year. Yeah, that would be my bet.
Govert?
Yeah, I have to agree with that. I think probably it's going to be with a bit of volatility, but I mean, they have a supportive buyer always, the big buyer in the central bank. So,
Chris?
So this is the quickest way to get me fired. Me giving an opinion on a market. So it's a nice plant for whoever's planted it to see if they could get me fired. But no, I can't answer it because I can't give a view on the market. But
same for you, probably, Matthias.
Probably Matthias planted the question. Okay. I don't know.
No, we didn't do that. We would not do that.
Sorry, guys. Okay, thanks. Yeah, then I'm afraid we really have to wrap up now. Thanks everyone for taking the time in your busy schedules to listen to the session. Also a big thanks to the panelists and the organizers of the conference. Over to you, Joy.
Hi, thank you very much for the interesting discussion. It's very insightful and with covering almost every aspect of the market. So I'd like to thank you, Fieke, Govert, Daniel, Matthias, and Chris for sharing your views on the trading financial derivative in Japan, tools and strategies to manage volatility, as well as the potential of overseas trading opportunity for Japanese investors, including retail participants. So thanks also for the delegates to participate in the event. We hope you have all enjoyed this session and found it informative. That brings us to the end of today's sessions. And I'd like to thank all our speakers and delegates for participating. Also, a big thank you to all our event partner, HKEX, our sponsors, Citadel Securities, Eurex, Hong Kong Exchange, ABN Emerald Clearing, and Societe Generale, as well as our education partner, CAIA, and media partner, Argus Media, for all your great support in making this event possible. We hope that you have all enjoyed today's event. If you have missed any of the sessions, don't worry, they will be available on demand. So tomorrow on 30th September, the last day of September, we will continue with FOW Japan Day 2. And we will start at 3:30 p.m. Japan time and 2:30 p.m. Singapore and Hong Kong time. So the Day 2 agenda will consist of a keynote speech from JFSA, Financial Services Agency of Japan, a fireside chat from FinCity Tokyo, and presentation from eStar, and as well as 2 panel discussions. One is on ESG integration, the other one is trading technology advancement. So a lot more to go. So thank you again for joining us today. We really look forward to seeing you tomorrow. So goodbye for now, and thank you again for the panel. Thank you.